Hello, traders. It's 8 a.m. Chicago time on Thursday, the 11th of July, 2019. This is episode 1553. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today, risk allocation and market sentiment overall. Risk on, slight risk on. It's not really anything substantial here. We see that the safety assets are actually lower, except for gold. Gold is up $5.09, trading at 14.18 and 30 cents, up 0.42%. And also the cable is up 61 pips, trading at 126.05. The rest of it is really in the Dow, 89 points up, and the Nasdaq is really only slightly up, just 11.75 points, which is basically one rotation. The yen and the euro are above the settlement line from yesterday. The DAX is just below. Really, it's an allocation that is slightly more to risk, but all in all, it seems mixed. The S&P is trading inside of yesterday's range out of value. We'll talk about that in a minute. And overall, the overnight session shows a market that is more tuned to the bullish side. Um, In terms of what's ahead and what could interrupt our auction, now there's been a lot. Today is a very, very busy day in the calendar. We start off with the inflation rate year on year out of Germany came in at 1.6 in line. And then the next thing was the ECB monetary policy meeting accounts that came out at 7:30 Eastern. And then the US inflation rate came out about a half hour ago, causing a dip. The prior inflation rate was 1.8% year on year, and the current was in line, which was at 1.6, causing the market to dip. A 1.6% inflation. 1.6% inflation is again in line with what was expected, and the market is just responded negatively to that. It didn't move that far, basically from the SOC of about 3,005 in the S&P down to 29.99 and a quarter or so. Um, the um, The core inflation, however, ticked up slightly. The prior is 2%. The expected was 2%, came in at 2.1%. From there, we got initial claims 209 versus 223, better. Going forward, we do have the second day of the Fed Chair Powell testifying, this time, I think, in front of the Senate. Now, the statement was released yesterday, caused a lot of movement, especially at 8:30 in the morning, and throughout the day, the comments throughout the day were kind of pushing the market around. But overall, the testimony today does have Q&A, and Fed's Powell may be asked different questions than the members of Congress did. But overall, generally in the past, it's just been a repetition. And really, this is a lot more about making a point politically than it is to determine what our financial condition is in the economy. At 11, we have Feds Williams. We do have a 4 and 8 week bill auction at 11:30. There's the WASDE report at 12. Then we get Feds Bostic at 12:15, Feds Barkin at 12:30, a 30-year bond auction at 1, and Feds Quarles at 1:30, Feds Williams at 1:30 as well. We get the monthly budget statement in the U.S. at 2. We get Feds Kashkari at 5 p.m. And then this evening out of China, we get the balance of trade, expecting a surplus of 44.65 billion at 11 p.m. So again, the calendar's stacked, and it's the Fed parade week, and that's where we are. In terms of what was expected yesterday versus what we got, here are the most likely scenarios, and you can watch yesterday's video, pre-market video, as to why. What we got really was scenario 1 and 2. We did leave a small gap behind. The gap is between, in the S&Ps, between 88.50 and 86 and a quarter, and overall we did push higher after testing up. Mostly, I can't say that the action yesterday was really directional, although it looked that way. To me, I saw early on the gap and go scenario. Why is this on? Boop. I saw the gap and go scenario. In other words, we took a gap right here. We have a gap zone from the prior day, and we have no reversion on the open. So very early on, it was a warning to shorts. Posted at Convergent and also later on in Twitter, and pretty much marked the top, unfortunately, on that tweet. That tweet definitely, as was remarked, did not age very well. But overall, we had a gap and go situation, and a gap and go situation, we do not want to fade that move. It's saying that the market's not interested in trading the prior range in the prior auction, and so the shorts have a low probability. It pushed into our 3007 stock zone, which is built on a measured move, and then it rotated down. The first trade I saw was right here. It's a pullback to mid and VWAP against prior highs. That trade clearly did not work, so that was a loss right there. But as I always say, the Monty Hall problem. That's a big clue. When an area that is expected to hold does not, it gives us an opportunity to trade the opposite side. So from there, I'm stocking short, looking for a pushback to the open and a potential breach of the IB low and a push towards a responsive move towards the prior auction. And that set up this short right here and a push down. We got range extension down, and as soon as we tested towards the prior low or the prior high or the prior range, we put in basically a V bottom on very little volume. We had a good taper on the low, tested all the way across, and what we ended up with, as you'll see here in a second, we ended up with a very balanced looking profile. Look at this thing. It's a beauty. Nice wings on this histogram here. Completely balanced profile with the value area being 3,150 to 3,150 down to 29.94 and a quarter, with a point of control at 29.97, which is where we closed. The market basically tested up. This is just a perfect textbook demonstration of how the auction truly works, right? No moving averages, no CCIs, RSIs, MACDs, or whatever. Just nothing wrong with those things. Just looking directly at the market in the auction, you can see that the market open, pushed higher, could not entice buyers to continue buying, found sellers at the high of 3,750, rotated all the way across, found its buyers, and then settled in the middle with a completely balanced profile. That right there is what the market attempts to do. Not to run your stops, not to cause the most damage, not to hurt the most people. The market's goal is to find that top, find that bottom, and find the price range in which all participants are likely to trade in volume, period. Yesterday's volume was 1.1 million, which is perfectly in line with what we would consider to be normal. In fact, that's right on top of the point of control, or the most common volume in this product for the pit session. So there you have it. The other thing I wanted to point out while I'm on this chart is rotations, rotations, rotations. We see that the positive rotations are so much stronger, and then all of a sudden, we see an expansion downwards of the down rotations. This is an early warning. Now, I still have to take the mid-long setup on a run up as strong as the one we saw yesterday, but I know that this is not likely to hold once the rotations start expanding down. This is not down here. This is not an indicator. It's simply measuring the rotations up and down as the market trades. That's the recap of yesterday. What did we do overnight? Overnight, we moved from the middle. There was no interest in selling this at all. From the reopen, we had basically more interest on the buy side, and prices seemed to move through the Asian session to the buy side until the Europeans came in. The Europeans came in, pulled it back to mid twice as we held steady, and what we ended up with is just an ugly profile that seems incomplete, somewhat of a P-shaped profile, short covering type of behavior, potentially, and the balance on this profile would probably likely extend upwards as the market opens. So as you can see here, very poor highs and a weak local lows that were poked through by the release of the inflation number. Not much more to glean other than the fact that there was pretty decent volume, and I expect that movement to continue into this morning's session. That's just the behavior of the market or the nature of the market. In terms of order flow, so you can see the drift up in the price action. The market just continuously drifted up in the overnight session, and then just held sideways into inflation. Inflation, if I zoom in here, it's actually kind of interesting to see it in the software because this column here, oops, this column here tells me the change that's taken place in full depth. And it's very interesting as we approach the number, you can see how all these orders are getting canceled. And you'll see across the board, you can kind of detect very clearly how things are moving. And as soon as the number came in and the market started to move lower, you could see a lot of pluses up here and a lot of minuses down here as the bids are being pulled. And overall, what we've done is we've moved down from 3005, which is the SOC, on the inflation release, and then we've just drifted back up slowly. And I expect this drift to continue higher into 3005 to close, or for the market to return its scene of the crime, or SOC, as I like to call it. So that's the overall picture in terms of order flow. Looking at liquidity, we do have some stable liquidity at 3,010, which makes sense. That is an auction strike. 3,010, 3,012, and 3,020 above and below. The liquidity has been stable at 29.90. Other than that, I'm not seeing too much. So 29.90 below, and then above, we're seeing 30.10, 30.10, 30.12 right here. You can see this is a stable offer. 30.12, 30.16, and then 30.20 as the likely stable offers. 30.20 being the biggest. You can see there's quite a bit on the offer up there. Again, the market often moves towards liquidity, but that's not a trading plan in and of itself. In terms of what we're expecting for today, so we can move on here, let you guys get back to doing your work. What are we looking for? This morning, the expectation, we're opening in range out of value. More often than not, when we open in range out of value, we expect a reversion back to the value area. Might bounce at value high, but most likely it is going to drop. Most likely it's going to drop below 3,000 for a test of 97 again. I expect it to make an attempt at 3,000, and then I expect it to extend down even further. This could push the overnight high. Remember, the overnight profiles is very incomplete to the top side, so it could push the overnight high before starting to shift down. But overall, opening in range out of value, the probabilities are on the side of testing the value area from the prior day, which is right there. Okay, so that's scenario one. An attempt higher, any attempt higher, I'm going to look to sell unless I see that it's an open drive situation, in which case I don't fade an open drive. I don't trade against an open drive. The secondary is a response that gets an impulse out of range, takes out the overnight high, and in this case, I'm looking for 14. 14 has multiple measured move target confluences, expecting it to provide some measure of resistance if we do push back in there. What we've been doing is at new highs, we often end up getting a squeeze back into the range once we make that new high. We don't generally finish on new highs. We saw that back here, but it's not very common. We tend to roll over as people balance out at the end of the day. Okay, so yeah, go spam somewhere else. So that's that. That's all I have for you for today. Good luck. Remember, you're not here to be right. You're not here to be right. As a trader, we don't care about you being right. We care about you playing out your edge, executing your edge perfectly so you can make money, so you can actually get paid for all the effort that you've made. One last little anecdote. I saw a poster at a mechanic shop that says the reason you pay me a lot for my service is not because of the service I provide today, it's because of the cost of me becoming good enough that you'd want to pay me. And the same goes for trading, right? We don't make money for today. We trade well for today, and then over time we hope to accumulate money through perfect execution. Our goal is perfect execution. Good luck today, and I'll catch you tomorrow. Take care.